Hey, it's Mac with PriceActionTradingSystem.com, and it is Thursday. It's August 7th. This will be our chart lesson for the day, and it is Thursday, so that's going to wrap up our week. No chart lessons on Fridays if you're new to the group or new to the videos. I usually try to get out of here by noon on Friday, so I used to do them 5 days a week, but it came too much, so I just started doing them 4 days a week. Anyway, let's get to the chart lesson. I've been talking a lot lately and been on my soapbox a lot, and there's a lot of trades today, so we're going to get straight to the chart lesson, and we're just going to learn today, and no soapboxes from Mac today. You can see a crazy day. We traded way up and then way down and then closed in the middle, but we still closed slightly up, if you can believe that. Right now, what's happening here in the after hours, it's like 7:20 before I'm getting to do this today. It's been a crazy day for me. So I apologize. This is a little later than I'd like to get it out there. I'd like to have it done by 3:30 or 4 every day and uploaded, but it just doesn't seem to happen as much as I'd like. Um, but anyway, you can see we are trading up here in the after hours, but that's meaningless at this point because you see what we did in the after hours yesterday, and by the time we opened, we were trading lower again. But we basically what we did was we pushed back through the EMA or midline. 21 EMA is what this midline is here on the uh, bands. These others are based on some proprietary stuff, but this is a 21 EMA, just like what we use on our regular chart. And you see prices did pull back, test it, and then push higher. So um, we tend to be going higher now. We'll see what tomorrow brings. But crazy day to end up almost unchanged. Again, we did close up slightly, but we traded both sides of that. So it looks like a big range day, but really it was a big down day where we just recovered once we found a low, and then we found a bottom and then recovered about half of it. So not quite half of it really. You can see the upper part of the line's bigger than the lower part, but I'd call that a mixed trading day in the end, but it doesn't look that way when we flip over. But let's flip over there and we'll look at it and you'll see what I'm talking about. And you can see it here, big down day, big bearish channel. We actually had an overshoot here in my opinion. Um, and then we reversed and rallied into the close. We didn't quite, we probably took back about a little less than half of it. Is what it looks like to me. But this was a big bearish day here. Lots of trades all the way down. Um, yeah, so not a bad trading day, honestly. Let's let's zoom in here. There was a news item at 7. I think it was 7:30, so I marked that off. It was really close to the 8:30 regular session opening before you could take a trade. But you can see we're just in a tight sideways range there, and you get a chance to go short at the high with plenty of room to scalp out. And it was a little bit of a failed breakout, so you might have caught a runner on that one. Had a chance to get a few extra points there. And then here we got it at least a triple test. We tested it once, came back twice, came back a third time. We do have a close outside the new low on this channel here. So I like going long there. You can't enter that one on the engulfing bar. You got to wait for that to close. And a lot of you, if you're new to this, if you see an engulfing bar, you're probably better off just ignore that bar, but at least wait for it to close before you make a decision until you get a little more skilled at chart reading. You'll save yourself a lot of heartache and a lot of losses by doing that. And definitely waiting on it to close. No ifs, ands, and buts about that. If you're not a skilled chart reader, never trade on a live engulfing bar. Wait for it to close and then try to make a decision. And even then, a lot of you would be better off just to skip it because a lot of them end up doing crazy things. But this turned out to be a nice trade. Runs up, gets a close outside, new high, and it sells off. There is a second entry short, but this is your signal bar. This one makes a lower high, so you really can't go short there. And then it runs up again, and makes another new high. So I really think these are two separate trends. I didn't draw it that way, but in my opinion, these are two separate trends here. Maybe this one's more like this. more like so. And still no chance to really go short there. Doesn't really make much of a difference. You might have looked at this like first entry, second entry, but again, there's just no real chance to go short there. Runs down, and we actually get a triple test here. And this was early enough that I would have probably said, hey, this could be a range day, so we're looking for longs. But again, this makes the low. This is your signal bar, so this one doesn't qualify. So you really can't get in that trade. But it runs up, first entry, runs up, close outside, new high, and a second entry short right there with a very nice signal bar. You wouldn't have had this trend line yet, but you can see there's probably easily a lot of resistance across there as well. I don't have a line up there, but there's a lot of resistance across there. You can see it several times. We pushed through a couple of times, but we've had multiple resistance across there. So I still think you can take that on the second entry. And if you catch that one trade, it's probably all you need for the day, especially if you catch the runner, which you had a chance to catch it there, in my opinion. And that's a big, nice move down. So nice setup right there. Would have been nice if we could have caught some of it on the way up too, but it just didn't work out. But we're running down here. You get a close outside, and by the time we get this close outside, we're just working sideways. You get a setup right there with enough. There's just enough room to get out there, and then you get another one. And we actually pushed lower here on a failed breakout, but it made a new low on the close outside new low. And the odds are, being that far away from the EMA and on a breakout of a range like that, is probably going to snap back at least to test the highs and probably the EMA too. And so you're better off to wait on the higher low, but you still may risk that one. And so I marked that one green. These failed breakouts will sometimes be important highs or lows. In this case, we're trending down, so your better breakout's going to be to the upside. It's more likely to give you a bigger move, but still, you never know. We might have been bottoming out here, and it's getting close to where we had some previous resistance or support earlier during the overnight. So I think that one's worth risking if you want to be a little bit risky. And then, of course, it turns down right there again, and you got just enough room to get out. You probably don't get a big runner on this one, but all the same, you get an easy scalp. And then we go into this another trend channel. And I actually, this one you could almost argue for it to be green because we're playing a channel, but you can clearly see how congested that got right there, and we couldn't get through that midline, and so you're really playing it back to the midline there. And so I don't think there's enough room. It ends up going to the other side. And again, with it being a triple test, you might risk it anyway. It's probably worth saying how you could mark that as a green. But in real time, I was afraid of it, to be honest, because we've had this break and a new low. And even though we haven't made a new low on this one, this could just be part of the second leg down. It doesn't look that way. It looks like a separate trend since it came out of that range. So I played it as a second range and was a little wary of going short there. But I mean, you could argue for it to be green if you took it. Somebody may ask me about it, so I felt like it was worth talking about. And even this one, you get a higher low here, but it's right in the middle. It's never a good idea to go to trade a range right in the middle with a higher low or lower high. There's probably room to scalp out there, but it's just not a good idea. I mean, you can see there's easily 2 points, a little more there, and it would have worked. But again, in real time, I did not like it. I like this one better than this one because you're at least following the rules here of going long off the highs with plenty of room to scalp out. You just have to worry about that midline because we bounced there twice before. Here you close above it. And you don't worry too much about the EMA when you're in a tight range like that, because if you do, you'll never take a trade. And of course, we're running up in a new trend, close outside, move to a new high, and you get a second entry short here on a breakout, and that's really just a retest of this breakout area up here. And so I like that one. Just basically, I think you can count this as a new low. You're not really counting second entries here, so it's just a breakout. But I liked it because if you'd drawn this, trend channel up here. It's not confirmed, but you can see it working off the midline as well. And if you'd have drawn it, you'd probably say, hey, this is right at that midline too. So I went back and forth. This one's close to being green, but you know, it's a really bearish bar, and you could trade this on the engulfing bar here because that's mostly bullish. It breaks higher, but again, remember, if you're new at this and you're not super skilled at reading chart, you never take an engulfing bar until it closes, and even then you should be real wary of them. So, but I like that one. And look at the move. You may not even could get in that trade because it does gap and turn. So you got to drop a limit order and hope it comes back. You never chase a trade. Never put your your limit order's got to go one tick below that where it would have, and you got to hope it comes back. And I don't know that you'd have got filled on that or not. It's possible, but you got to be quick getting your order in. And then it runs up. Just a first entry. This was a second entry, but you can't take a second entry into the lows. First entry, and then we finally get a break, move to a new low, a little two-legged correction, so you're apt to get a measured move on a second leg down, and there's the first leg, and there's the second one, and you can see it's real close to a measured move. So, and that's a second entry short. Notice the new low. Technically it ticks lower right there, but that looks like one leg up correction, second leg up, so I'm going to treat that like a second entry. And you actually have a break and new high there too after two legs up. So I'm going to treat that like a second entry, and I think you can, especially with that little double swing right there, because that's often the center of the pattern. And in this case, that's exactly what it was, and prices run back down again. So what happens is you get a break of this channel and two legs down to a new low. And then it corrects, close outside, new high, but there's no real setup up there you can take. And it runs down and you make another new low right there, and then you get a first entry, second entry, but you get a close outside here. Technically you don't really get a close outside, but I like that. This has been very bearish, and you're probably going to get a retest of the low on this. So I like that with just such a bearish bar being, by the counts, it's a second entry, and we didn't quite get back down to the trend channel line again. We didn't really go back to the midline here either, but this thing has been very bearish, and every turn down you can see is pretty much gone back down, and it continues to do that later, but it hadn't done that here. So I like that one. That's just a first entry, and then there's a second entry short there, but that's too congested, and it tries to come up again, but now you don't have room to get out, and then it bounces. You get your close outside. And that's just a first entry short, so I don't think you can take that. You do get a close outside and a new high, but it's just a first entry short. And we've been bearish for a while, so it's about time for a correction. So unless you get a really good setup, you got to skip it. And I wouldn't call that a really good setup because it looks a little sideways too. It would have worked, but obviously you don't know that in advance. And then notice we get another little two-legged correction. There's actually, I didn't draw it, but there's a trend channel working down. Close outside is two legs, and then it looks like it's going to make your next leg down, but there's no setup there because the signal bar doesn't qualify, and that filter keeps you out of that trade. It probably would have worked anyway. I think it gets enough to scalp out, but you can see it doesn't make that new low there. But still, there's 3.5 points. But there's not a setup there because there's no trigger. There's no signal bar trigger, or a signal bar that qualifies with the trigger. But then we run up, first entry, runs up again. You get your close outside, new high, and that's the second entry short. That's not engulfing because it doesn't break above. Sometimes people get confused about what an engulfing bar is. An engulfing bar is a bar that has a higher high and a lower low than the bar to the left of it. So in other words, it totally engulfs that bar. Now that doesn't break above, so it doesn't totally engulf it. That's not an engulfing bar. That's just an equal high, and it is a second entry short, and you do have your break in new high, and you're probably going to come back and test this EMA again before we go higher. And we did push through the midline there, so it's going to probably at least pull back to test the midline as well. And so you would have gotten out of that before it bounced off that midline and EMA, but then it turns down again. and there's no setup there to go short the next time. And that's the move you hope you catch here, but it just didn't happen until here. And there's no way to get in that one. But notice the break outside, a couple legs to a new low, and it reverses. There's a higher low here, but again, the signal bar is no good. If you'd had a good signal bar there with that overshoot, I'd probably say, yeah, you want to try to nab that in case it's the low of the day. But you're probably at least going to bounce out of there on that overshoot, and you can see it rockets out of there. But it does not turn out to be the low of the day. I wouldn't count this as a leg, so your leg starts here. So first entry, and then pull back, and that's a second entry. And notice how you're finding resistance off that EMA again. Very bearish bar. I like going short there on that second entry. You do get a close outside and a new high all in one bar, and that's a lower high and a second entry short right there on a break lower. There's a hidden second entry here, but I don't like it. I don't even like the signal bar. It's close to being qualifying, but I don't like it. You would think we're getting close to a reversal here, but we don't. We keep going. This thing just keeps going. But you got to play these short-term trends to keep you on the right side, and you've got to close outside and two legs down here. Just a first entry. And then notice, I didn't mark this one, but notice you get a quadruple test down here. 1, 2, 3, 4, and you get a nice signal bar. The problem is it looks like a range. Well, it doesn't look like one. It is one. And so there's not enough room there. There's still plenty of room back to the EMA, but with it turning down that many times right there, I'm going to play that like a range, and there's just not room to get out. It works, but you don't know that in advance, so I think you have to skip that. Even with when it didn't go higher on a triple test, you definitely got to be worried that it might turn down again. But it doesn't. It rockets on out of there, close outside, move to a new high. And this is a matching lows, so that's a new low. So first entry, second entry, and a lower high after a break and new high. So I like that one, but it comes back and gives you a triple test as well. So I really like that one, and that's the one that takes off. But notice it moves down, close outside, moves to a new low, and it gives you a double bottom here, and basically you can treat that like a high or low. It's not a perfect setup, but you got your break, move to a new low, it bounces off the trend channel line, gives you what looks like a higher low there, and so plenty of room back to the EMA. You're overdue to come back to it, so maybe you risk that one. This has been a strong downtrend though, so you got to be careful, but we're overdue here. Look how bearish it's been, but when it's that bearish, you got to be careful. But I usually won't mark any buys, but if you got one that's this organized with this kind of structure and you understand the structure, sometimes it's worth risking, because you can see people have been trying to pick bottoms and they're starting to get some momentum, a little more momentum each time, and so eventually one of these is going to work. And just make sure you got enough room to at least get a scalp. That's the key. And here, there's you're way away from the EMA, so it's probably due to at least snap back there, even if it's going lower. So it's a little less risk because of that, but it's still risky. So, and it does look a little congested, but that's what happens when you're finding support before you bounce. So you can't really judge this by the congestion there. Runs up, close outside, move to a new high. And that's a second entry short right off the midline again after a break and a move up. So I like that one. Big bearish bar, very nice bearish bar. I like that one. But guess what? It bounces here, and you want to draw that trend line up just in case that's going to be a bottom. And guess what? You get a close outside, new low. And so a first entry, then it turns back down. It doesn't go very far at all and turns up. So that's a second entry long. I like that one, especially when this closes. This is an engulfing bar, so you got to wait for this to close, even if you're skilled, because it's not bearish enough. And I don't know if I would trade that being counter trend. Even if that was a completely bearish bar, I still, as a skilled trader, I wouldn't trade that as an engulfing bar. I'd wait for it to close. Now, somebody will probably say, well, it's right into that high, but you're trying to catch a reversal, and it's a second entry. So I don't think that matters as much. I had another one that came up like that. And you can see There's maybe one. There's maybe going to be a. It's not quite 6 ticks, but I still like it. But I did mark it green because you're limited on your room there, and it does close through the EMA, but you can see it takes on off. And then we were working back down again. Close outside, a couple of swings to a new low. Um, Bounces, confirms that trend line, but that's not a good enough signal bar. And then it comes back, and again, high or low there. And again, it's just not a good enough signal bar. And so I didn't mark it. It would have worked. You could have made either one of those work, but they just don't quite fit the rules, so you have to skip them. And there it is. Lots of good trades coming down. Just trade with the trend, and you can make them. I say this a lot, but we haven't had a lot of real strong trends except a few to the upside, and even then they've been really mixed and not necessarily one big trend like you see here today. I mean, this was one trend that lasted all day into 2:30. We still hadn't had a break of that trend channel. We didn't even really get it confirmed till after 2:30. But it's clear by now that midline is, and this is all in play, and it looks like we have an overshoot. So I believe you could confirm this way ahead of time before you ever got that touch up here. And when you get one like this, um, play these shorter term trends and channels to help keep you to know when they're coming to an end, so you know when it's probably going to try to correct. But when you see these, mostly stay with the trend. And where I was starting with that is that when you get a trend day like this, if you enter with a trend, you can often make mistakes and still come out okay. But if you counter trend trade and make a mistake, you'll get burnt big time. So you got to, try to stay with the trend as much as you can, and you're going to be much better off. And it was pretty obvious when the trend changed here because you got this bigger channel that kept going. You got it confirmed right here and then confirmed again. So you stay with that until, and it looks like in the end, actually this is into the next day, but it looks like it's still working off that trend. You can see that midline working in there. So I think that trend is still in play. But let's just assume it only goes one day, and maybe it is there, and that's something new starting up there. So anyway, we don't care too much about this. Don't try to trade this stuff in the overnight. It's like watching paint dry, and you'll get burned. You'll get stuck in a trade, have to stay up all night. And I tried that. Tried it for years, and it just, you don't get any sleep. You don't make any money. You get burned a lot. I know there's some people that have jobs and they try to do this around their job, but it's not worth trying to do it in the overnight hours. I'm just going to tell you. You can start, you'll have to convert this to your time zone, but you can start trading. I always say 7 o'clock, but I start to see the market move pretty nicely as early as 6 o'clock sometimes. So you might could try to trade from 6 to 9 if you've got a job that starts mid-morning or something, or from 6 to 8. But the problem is you got to be careful if you get in a trade at 7:45 and you have to leave for work at 8 o'clock. You only have 15 minutes for that trade to work out, and so that can sometimes pressure you a little bit. And don't try to trade at work unless you have the kind of job where you can shut your door and concentrate on this chart and nobody can bother you. But if you're trying to do a regular job and trade at the same time, and you've got a breakaway during the trades and stuff, don't try to do that. You're gonna just cost yourself a lot of money. And I get it. Some of you don't have any option, and you want to try to learn to trade, and you want to get that freedom of being a trader, but you got to do it the right way, and that is not the right way to do it. So it's just good advice, because I know a ton of people that have tried it, including myself, and it doesn't work. It just does not work. You can't. It's difficult to do. So anyway, just trust me when I tell you that maybe you can start trading 6 o'clock a.m. Central Standard Time. Convert that to your time zone, and if you got the mornings and don't trade after 2:30 in the afternoons, and definitely don't trade after from 5 o'clock to from 5 p.m. when it opens back up to 5 a.m. the next morning. Don't even try it. You're just wasting your time, and you're going to get burned if you're trying to day trade it. Now, if you want to swing trade it and you can go to bed and sit on a trade, yeah. I mean, that's the beauty of being a day trader, is that you could enter a trade at 5 p.m. in the evening, and you're not going to have to pay. You won't have to use regular margin until 5 p.m. the next day. If you're trading with most of your day trader brokers, they're going to kick you out before 5 p.m. the next, or 4 p.m. the next day. I'm sorry, because the market, I'm thinking my times, so it'll be it opens at 5 p.m. and so that 12-hour period you can be in there, so you could actually go to bed and not worry about your day trader status if you enter after 5 p.m. As long as you're out by 4 p.m. the next day or whatever time your broker kicks you out. You need to know those times. I haven't traded so long in the afternoon. I don't know what time the brokers kick you out really anymore. It used to be the market used to close at 3:15 or 3:30, and they would kick you out around 3 to 3:15, which no problem if you're in a winning trade. But if you're in a losing trade and they kick you out and the prices are still moving in your direction, you take a loss and it hurts because you had your, especially if you have the right read on it. But it moves so slow, that might happen to you. So just keep that in mind. If you wanted to swing trade the overnight, maybe. But even then, I just think it's risky. I mean, the price action works the same in the overnight. It just moves at a snail's pace. So if you can find the trend and play it and get the setups, but you might have to sit there all night for hours and hours. So like I said, if you wanted to try to swing trade it, that might be a little bit different. And I think you could swing trade it using day trader margin because you're going to be out. You got time when you wake up the next morning, even if it's 10 a.m., you still got all day to get out before 4 o'clock or whatever time your broker kicks you out. So that's something to think about. I still don't recommend trading it. Don't take that as a recommendation to trade it and to try to do it that way. That's just a thought. If you can't day trade it and you really want to try to trade bad enough, you might swing trade it like that. But I just don't recommend trading that overnight stuff at all. I don't think it's worth the risk or the time or the effort. But anyway, I'm going to wrap it up. We're done for this week. I'll be back Monday. I'm done for today. I'm done for this week. This is Matt with PriceActionTradingSystem.com, and we'll see you next time.